which stocks are poised to really benefit from this rate cut that's expected in about 3 to 4 weeks?
Well, the companies that are going to benefit most are the ones that are the most exposed to debt because high interest rates makes it hard for them to access capital. They need capital for operations and for growth. As far as companies that need to use debt for operations, those are the smaller companies. Anywhere from a micro cap to a small large cap stock is going to be impacted because they're really dependent on bridge loans and operational loans just to keep the cash flowing on a month to month basis to be able to pay the bills. Some of the stocks that I would really expect to see take off in a lower rate environment are discretionary stocks, in particular, anything to do with housing or the automotive sector. Those two sectors, the consumers are incredibly impacted by higher rates. So when rates begin to fall, we should see the housing market and the car market become unfrozen.
And so, if you're an investor, you're looking at these different sectors right now, you're looking at a good CPI report today. What does your investment look like right now, even trying to get in before these rate cuts come?
Well, right. So there's a lot of volatility in the market still. Fear is coming down, but we've got a lot of mixed earnings reports, and the outlook is still kind of mixed. Right now, we're looking at a market in a wait and see mode. The S&P 500 may continue to rise in the near term, but with sector rotation in play, I would expect to see it peak out again pretty soon. Right now, the best thing to do is to target those stocks that you think are going to do well and wait for any dips and buy them on the dip. We need to remember that it's still 4 weeks until the first rate cut is going to come, and it could be months before the impact is felt by consumers. So we are looking at an economic shift, but it's probably not going to happen for a few more months at least, maybe 2 or 3 quarters, where we start to see it showing up in the data.